permit me to ask our lead paper, just be upstanding. It will be nice we have a bridge and a bridge of your profile. Because I remember the last time I read in a particular program, it was about 4 hours. But we have been able to abridge to less than 5 minutes. So our lead paper presenter, Yomi Olugbenro, is an experienced tax expert and business leader with distinguished career across various industries. As the partner and West African tax leader at Deloitte, he plays a pivotal role in shaping the firm tax strategy throughout the region. He holds a bachelor's degree in accounting and master's in business administration, and he is an alumnus of the University of Manchester in the UK. He's also received esteemed fellowship from the Institute of Chartered Accountants of Nigeria, the Chartered Institute of Taxation of Nigeria, and the Chartered Institute of Stockbrokers. Throughout his career, Yomi has occupied several leadership positions, including membership on the Nigeria Presidential Fiscal Policy and Tax Reform Committee. He's currently chair the board of the Tax and Fiscal Policy Management Faculty of ICANN, and has previously served as members and dean of various faculties within the professional organization, including ICANN and CIT. And this role has empowered him to influence policy and establish best practice in taxation and fiscal management. As a highly regarded thought leader, Yomi is a sought-after speaker and commentator on fiscal and economic policy issues. He frequently consults with multinational companies on investment and fiscal policy in West Africa, particularly in Nigeria, and is committed in fostering the growth and development of businesses across the region. Please join me as I welcome to the podium our lead paper presenter, Mr. Yomi Olugbenro, FCTR.
A very good morning to everyone, especially appreciating all our regard past presidents, both on the High Council and Dean, other council members that will be here, and ESCO of the district in particular. Thank you for this special invitation. It's always a privilege. Nigerian tax reform, paving the way for economic growth and fiscal sustainability. I'm not sure if the slide logistics will permit you to follow, but if not, I'll try as much as possible to let you follow through the conversation. Is the slide showing? Okay, all right. So I know the time it's always pretty tight, particularly to discuss a subject as broad as the reform bills. But the interesting thing is that whatever I'm not able to cover within the time allotted, I trust that the distinguished panel will be able to break it further down. So I'll take time to maybe provide a lot more of the broad context, and as much as possible, definitely the detailed time will permit, and we have the conversation later. The time allotted, I'm told, is 30 minutes, so it's 11:30, so my time starts only now. All right. From an outline perspective, I can't see the slide, but if you go to the outline, I've tried to structure my presentations into 5 areas. First, I will try to build small context because of the topic, right? We said we are situating the reform within the need for economic growth and fiscal sustainability. So some little bit of teasers to just provide context that many of us here already are familiar with. Context setting, then I'll go to the conceptual framework of the bill and the reform, and then as much as time will permit, content and the highlights, and then a little peep into what the future of tax practice will look like if we succeed, or when we succeed with this reform, and then I will close with some thoughts and concluding remarks. Now, if you go to the, I don't know whether the third slide now, where you have the fiscal snapshot. I've used just that slide to provide a little bit of context on where we are as a country and as an economy, particularly from the fiscal side. I've deliberately, okay, thank you. But don't worry so much about me. Let the hall see it as much as it's practical, but it's good if I can also pick from the, when I'm losing my thoughts. All right, so if you go to the first slide about, I just try to picture where we are from a fiscal standpoint, and three things, so next slide, three things are quite germane for us to look at when we look at where we are from a fiscal standpoint. You can look at, the slide before this, so you can look at, where we are from revenue perspective, okay, how much the government is able to generate, because we're talking growth and we're talking fiscal sustainability, right? The truth is that many people will agree, well, a number of people will agree, but if you really stay close to the number, you won't hesitate to agree that in as much as we seem to be making so much, depending on who you're talking to, we still have significant headroom from a revenue standpoint, right? And there are many ways to look at that. You can look at it from the size of the budget and how much we're able to finance from revenue, right? You can look at it from, the need, how much is required for capital project and how much we're able to marshal. You can look at it from the size of the economy and comparing us to our peers or even economies that are much smaller. And so, whichever way you try to look at it, you will know that the country is in that need of extra funds. By the statistics that I showed there as of 2023, the total amount that is available to the federal government now, right, is 12.5 trillion naira. The slide on top of that, even with the low implementation or the level of implementation of capital projects, the total amount spent is 22.5 trillion by the federal government, right? Meaning we generated 12.5 from 22.5 that was expended, not that was needed. Meaning that in that year alone, there is a 10 trillion naira deficit that added to our debt stock, right? And then if you look at the charts underneath, that spoke to our debt. As at 2023, our total external and domestic debt is over 135 billion US dollar. Some recent statistics says we're now within the neighborhood of 150 trillion naira from a debt perspective. So, what is the summary of all of that? We're not in a very good place, right? There has been improvement and effort seems to be focused on how to, change the narrative, and we must admit that some measure of progress have been made. Just yesterday or 2 days ago, I read comments by the CBN governor, where he said our monthly debt service obligation cost had reduced from about 540 million USD every month to now below 300 million USD every month. That is debt servicing. So you can multiply 300 by 1,500 or whatever exchange rate you want to use, it gives you 4.5, and then you can multiply that by 12, and you have an idea of how much we will still spend. So, from a fiscal standpoint, we do have a challenge. I think that context needs no further need to overflow. The second slide, from a context perspective, is where we are from an operating environment when you talk to the tax system. This is a gathering of professionals, and we all know what the issues that are bedeviling. So the next slide, please. So the issues that are bedeviling, tax practice, and the list is long, right? From low penetration or the yield we're getting, Again, each of these points, it's not without acknowledging the fact that progress is being made. The reason why they continue to be a topical point is because compared to where we should be, the race is still a long one. I mean, this year, I think the FRS is targeting 25 trillion naira. That's massive, from where we are. But all you need to do is divide that number by 1,005 and see the dollar number and compare that to the burden that the country is facing. You will know that the gap is still more. So, from low penetration to low tax yield to leakages to the inefficiencies to the multiplicity of taxes to the multiplicity of agencies to low compliance even by the citizen. The intent is not to, again, overwhelm with what we already know. I think the context we're setting is that we do have challenges with the current regulatory tax framework, including the operating environment. So whether it's taxpayers don't pay enough, which is the side that government and the revenue authorities see, and they are right because they do have data that shows that the number of businesses that are registered, the number of taxpayers that are within the tax net compared to what it should be, the gap is there. And then you flip it on the other side where those who are not paying will find legitimacy in saying, so what's government doing with what we have paid and what is the moral stand for government. So the issues are there, including the complications you have with the law being outdated, knowledge, capacity, technology, we have, the list goes on. So it is from this context that, if you go to the next slide, that a lot of reform, particularly if we situate it within the current administration, had to come in. So we have the underlying challenges that we're facing from an economic standpoint: inflation, growth, debt servicing, and all of that. And so quite a number of reform measures were rolled out, one of which is the subject that we're discussing today. So again, that context is trying to say, don't look at the tax reform in isolation, because the fiscal policy alone or the tax leg of the fiscal policy will not solve all of the problem. We've had several policy measures, including removal of subsidies across different things, subsidy removed from fuel, subsidy removed from power, subsidy removed from currency, exchange rate, and all of that. To all that the CBN is doing to manage inflation with NPRs being raised and borrowing costs going on and on. We may disagree, and expectedly we could have different perspectives as to the timing, the pacing, the method of administering or implementing, but quite a lot of professionals that know enough of what is going on with the economy don't fundamentally disagree that we do need those reforms. But we could disagree as to how they're implemented, the sincerity of purpose, the counter actions we need to see on the side of the government when the citizens are really hardly beaten, and so on and so forth. So the fiscal consolidation leg of the reform is the one that houses the tax reform that we're discussing today. And it's all about how do we mobilize a lot more domestic revenue, and how do we do that more responsibly. And the next slide, then I try to picture, and I did this so that you can contextualize the reform and try to score it or appraise it or try to see where there may be some gaps, right? What I believe an ideal reform from a tax perspective would look like is the one that helps us to address at least three things from a tax perspective. It should first of all help us to address how much we are making or how much we are able to make, or put it more simply, a reform that will ultimately lead to increase in revenue. The second pillar will be, so the first is what we are making. The second will be how we are generating it. It's got to be business enabling. it's got to recognize where the pain point is. So yes, we recognize that we want to make more money as a country, but we can't do it in a manner that will kill the goose that is laying the golden egg, as it were. So how we are raising the revenue is the second pillar, and then the third is how we are spending it, right? The responsiveness, the way the government is accountable, is transparent, is focusing on the priority sector, including all that we're doing from the borrowing, you know, and all of that. So, and then the next slide, I think this is the last slide, you know, just trying to build into the reform itself. To say that this is not our first shot at trying to reform the fiscal space. A lot has happened over the last years, from new national tax policy, the last one being in 2017, changes in law. We're familiar with the series of finance acts, you know, that the government has been issuing. We at least had 4 of them with the last administration, including the attempt by the various revenue services, particularly at the federal level, and Lagos State also being a good signpost for that, trying to adopt technology and try to digitize the system. So a lot has happened. We've seen amnesty, for those who remember, very recently, and there has been a lot about global and local collaboration, you know, exchange of information, country by country reporting. We are hearing a lot about what ATAF, you know, and OECD and all of that are doing, including some of the attempt to, you know, update the national taxpayer register with Project Lighthouse, you know, that was attempted last. So a lot has happened in the past, and then this is what is leading us into the topic of today, which is the tax bill itself. If you go to the next slide, we remember that last year, 2023 August, the president inaugurated the reform committee chaired by our very good friend and brother Taiwo. And I mean, looking around, I think I've seen one person who was also a member of the committee, which happens to be a member as well. And the committee itself tried to structure, or the mandate was structured to address some of the things that I have mentioned. Okay, one is revenue transformation. How do we make more money from where and from multiple sources? So that reform is not just about taxes. It also looks at, you know, natural resources, how we're going to make more money. It looks like government-owned enterprises, how we're going to make them more efficient. It also looks at, you know, government assets, how to make them have more return, on you know, government having more return. So revenue transformation is one. Fiscal governance is another one, which is all the rules around how we spend, how we put in accountability and all of that. And then the third leg is economic growth. All right? And then that committee was divided into, you know, several sub-teams. We have quick wins. We have the output of the main critical reform, which is the real tax bill that we are discussing. And then there is a future fix. I need to move next. I need to fasten up a little. I can see that time is not even helping me at all. Now, from a structural layout perspective, many of us in the room will have heard that there are 4, you know, tax bills that is currently being promulgated. So this is how the 4 bills are laid out. So the 4 bills essentially are meant to replace all the existing tax laws that you know. All right? The first one, which is the Nigerian tax bill, all right? When the bill is passed, it's supposed to be known as the Nigerian Tax Act. It's going to be the law that will consolidate all the tax law that we up till now know that exists. Your company's income tax, petroleum profit tax, the excise tax, PITA, stamp duty, all of them consolidated into a single law called the Nigerian Tax Act. The second is the Nigerian Tax Administration Bill. That appeared to be a new introduction to how we have always known our tax law being framed before. Because before, inside the tax law itself, you will have the charging act, and then you also have how it is administered. The process for filing, registering, payment, everything is typically contained in the principal act itself. But what that has done, which is leading to the need to do this, is that you have different administration, penalty regime, filing regime in different laws, because those laws were made at different times. And so somebody could, be defaulting in payment. If that tax is a VAT, it's a different penalty regime. If that tax is company's income tax, it's a different penalty regime currently, because they are in different laws made at different times. So the tax admin is saying, look, if you don't pay your taxes, it's the same offense you have committed. Can we try to harmonize and make sure that there is standardization in that? So the Tax Administration Act or bill, which will metamorphose into law, is aimed at providing for that. So everything relating to administration. And then we have the Joint Revenue Board Bill. Most of us will remember that we used to have the Joint Tax Board. And the Joint Tax Board was established by a law, all right? Sections of the Personal Income Tax Act, and all of that. And so a new law to give birth to that new board that will replace the Joint Tax Board is what we call the Joint Revenue Board. Just imagine it from the law that originally set up the JTB. All right, and then you have the Nigerian Revenue Service Bill, or the Nigerian Revenue Service Establishment Bill, which is the one replacing the Federal Inland Revenue Service Establishment Act. So that's how the four laws are, that's how they are connected. The next slide try to break it down into some specifics of what each of them contain, but I will skip that for the sake of my time. If you go to the two slides next, the one that talks about the structure. So what I will try to do is to then provide some quick insight. Yeah, thanks for this. Some quick insight to how the law is then framed. So I told you that the Nigerian tax bill is the one that actually establishes or consolidates all of the tax laws that we have. So what you have when you open the Nigerian tax bill is you see different kind of sections and chapters. All right, there are at least 9 chapters or 9 parts, including the schedules. All right, so chapter 1, for example, is where you have the objective and all of that. Chapter 2 is where you have the taxation of the different, taxation of individual, taxation of resident, taxation of non-resident, taxation of partnership, development levy, and everything related to, we have in chapter 2. In chapter 3, you have taxation of petroleum operation. In chapter 4, you have double taxation. Chapter 5, you have stamp duty. You have VAT in chapter 6, you have excise in chapter 7, tax incentives in chapter 8, and then chapter 9, general provisions. So it means you only have one single point of reference for the law. So you will no longer be looking for where was that circular, is that a VAT question, is that a Peter question, and if the thing is done the way it's been intended, even after the passage, we should be able to have automation where you can do find and search, and be able to look for sections that relate to a particular technical topic all in one go. Then the next slide tries to give us some key highlights. I think maybe the caveat I will give on this particular one, and the slides can be shared because I know very soon I'll be asked to stop. But if you look at the slide, you will see some highlight of what the bill is talking about. But definitely it's impossible to extract everything into a particular slide. And the caveat again at this point is that the bill is still going through lawmaking process. Consultation is continuing. About 2 weeks ago, we were in Abuja for a whole week for House of Rep and the National Assembly public hearing. Last week, and I think on Monday, we heard that the House has now passed it for third reading. All right, after the clause by clause consideration, it's now left for the Senate, and then for harmonization. And when that is done, you then pass it for assent. Between the original bill that we all have seen and the input that we're hearing and the consultation with the governors forum, with the various stakeholders, quite a lot has changed. So it will be difficult to just stand here and be waxing lyrical about all of it. But if you are interested in some of the provisions, from a CIT perspective, there was an original proposal to reduce progressively the company's income tax rate and progressively raise the VAT. Put simply, the idea is a shift towards indirect tax that is meant to be easier to collect. You will find it difficult to run away from paying VAT or indirect taxes, because the government doesn't need the 200 million people to come and file VAT return. The government only need to focus on the large people who are selling to all of us. So one person can be the one to account for the VAT that all of us are incurred today in this room. But if it's personal income taxes, they will need each and every one of us not only to come, but to be faithful and truthful in what we are declaring. So you can imagine the burden. And then the second concept about direct taxes or income taxes is that, especially when you're working in an economy that is depressed this way, you need increased disposable income. And you can only get increased disposable income by reducing taxes. But whatever you are losing from the low direct taxes, you can gain from the multiplier effect of what happens in the economy. So that is the whole direction. Why there was a suggestion for direct taxes or company's income tax to reduce, plus the fact that it also attracts investment when your tax regime is seen to be attractive. All right, but as you are spending, the government is getting like every minute. All right, from the VAT. The other thing about the VAT is that as a justification for the suggestions to increase, the proposal was to change the VAT from just being a simple sales tax to real VAT, where you can claim input VAT for all eligible input. Currently, unless you are selling tangible products, you don't claim input VAT. On overheads, on capex, you capitalize it and it has its cost. But the proposal is that the VAT input is completely expanded, so you claim input VAT not only on finished product, on tangible goods, you claim on overheads, you claim on capex. And so when all of that is added up, there is a justification to increase, because from a cash flow perspective, if you do the modeling, it shouldn't lead, to increase in cost just because of the rate. Of course, there are modeling as to where the break-even point sits, and all of that. So there are quite a lot. I'm scared of trying to pick each one by one, because if you give me the whole day to discuss tax, now you go tire. All right. But quite a lot of strategic, innovative, transformative suggestions, including the one that tried to merge CGT with company's income tax, so that the arbitrage and the hide and seek, that happened from saying this should be taxed as CGT, this should be taxed as income taxes, is eliminated. Quite a lot of transformative provision. So the next slide, I try to call out a few things that will still be of interest from the company's income tax, and I can mention just a few that I know, at least from what I've heard, hasn't changed. Number one, the income to be taxed going forward, if this bill is passed, is going to change from what we previously know as all income accrued in, derived from, brought into, or received in Nigeria. Now it is all income accruing in or derived from, especially for non-residents. So that's received or brought into, if it's not attributable to business venture in Nigeria, it's no longer taxable. Okay, companies will still be liable to tax on their worldwide income, but for non-residents, you don't say come and tax this income in Nigeria just because the person is here and received it, if the profit that generated, the activity that generated that profit is not attributable to a base, here in Nigeria. The other one that could, catch your fancy is that phrase for deductible expenses. You remember that phrase? It must be wholly, reasonably, exclusively, and necessarily. The rent test. No, the taxation of business has gone way beyond that. Who is that businessman that is going to pay something that is not necessary for his business? And who gives the tax authority the know-it-all capacity to determine when it is reasonable, and when I'm the one running my business, but the tax man will tell me when it is necessary. So now it is only wholly and exclusively. So whether it's reasonable, I have incurred it. Let me bear the consequence of running loss. So those type of provision and in laws, again, it is the entire law that is changed. So even if I list 100 things, you can be sure that it's never exhaustive. So I'm just speaking on the ones that we know very well. The old minimum tax rule, has been changed. But now we have 15% minimum tax for multinational, and the justification for that is we are trying to align with the OECD Pillar 2 so that we are not holding the short end of the stick. Non-resident company will no longer be liable to tax in Nigeria just because they employ Nigeria who provide services. If those services are consumed outside of the country, I've spoken to the unifications of income and capital gains that are taxed together. But also, while there are provisions to incentivize the business, there are also provisions that tend to strengthen the system and penalize infractions. So, for example, capital and operating expenses will be disallowed or non-claimable if you haven't paid the applicable taxes, for example. All right. So it's no longer a case of whether it is reasonable. It's now a case of whether you yourself have complied with payment of the applicable taxes to come then and claim the deductibility for that expenses. We also have development levy that has been introduced to consolidate all the extant taxes like NASEMI, education tax, and all of that. So a lot of provisions. Two other important interventions is the one on small businesses. We have always known that with the finance bill, but the ban for what constitutes a small business has been raised to 15 million. Is 50 rather. I just wanted to check that you are with me. And it was, I couldn't even hide. All right, and a lot of other things. Let me move on to just I don't know what go next. Okay, go next. There are quite a lot that is in there, but let me touch on a few on companies' income tax. We know that we've had all the reliefs and allowances as it were, mostly consolidated. Okay, the only one that is remaining now is the accommodation, and it's indeed a stipend. So I don't really even consider that as a relief or an allowance. But at least there's a reason why that is there. The idea is for you to be able to fish out your landlord so that any rent that may be due, if on the returning taxes, is collected. But from a principal perspective, this is the way I will explain what the new face of the personal income tax will be. Relief and allowances have been consolidated largely. The tax rates have been expanded. The idea is that even though you may no longer have your CRA, which I think is a big deal, all right, you get close to 21%, depending on how much you are earning currently as relief before you tax the remaining 80. That's what we currently have. But in the new law, there is no longer CRA. So you will be taxed on your 100% technically. After claiming maybe like pension and social security and all of that. However, whatever you are losing from that CRA remove has been returned by expanding the tax brackets. All right? And the way the expansion is done is such that unless you are on the super HNI side, like the Lagos and District Society ESCO members, our esteemed past president, and all of that. If you are in my group, right? If you are in my group, your taxes will not necessarily increase. In fact, if you do the modeling, you will need to be earning 50 million naira and above before your taxes begin to rise. Of course, it can rise as high as you paying close to 24% effective tax rate from the current 18.96 maximum possible ETR. The theoretically possible ETR currently is 18.96. For some people it will be 19.6 if they're just a little close to 20 million. But from that, it can rise to 24. But that's for those, those class of people that I mentioned. If you are below 50 million, down that way, if there's going to be a change at all, almost not noticeable. And then at the very low end, it's the complete exemption for people who are earning minimum tax. So again, the idea is to make the tax more progressive. Everywhere in the world, the top 5, 10%, depending on the country you are looking at, pay 90% of the taxes. Because that's where the capacity to pay really is. The middle class is usually protected. All right, so, and I think the law tried to do that in this particular case. Before finally, no, it's not finally. So maybe I'll just mention them quick. A number of other exciting provisions to look out for if this bill is passed. I spoke to the expanded input VAT and the exemption for small businesses. Again, in constructing the new VAT, there was also an attempt made for what constitutes the core service or products that household will consume, and they were added to the exempt item. Again, is to manage the impact of inflation, things like rent, like transportation, like healthcare, like education, all of that are exempted. So again, even though rate is supposed to be rising based on the old proposal, all right, it was meant to rise again only on what you consider maybe luxury or things that the HNIs will typically purchase. So what the household typically focus on are exempted. So, well, like I said, the rate has been held constant, at least based on some of the consultation. We are told that VAT rate should not be increased because of the inflation. We've been told that company's income tax rate should not be reduced because of because of anything, whatever is the justification. All right. So and so that's how the bill is. If you go through, I try to touch on some of the other bills. I have mentioned them generally when in the intro. The tax administration bill, like I said, that's where you have how the taxes itself is administered. So if you hear that FRS or the revenue service rather will now be able to deploy technology, they will harmonize or collect taxes for all of the federation, including duties, for example, not assessment, at least based on the original bill. All right. So all of that you have them in the Nigerian Tax Administration Bill. And if you go to the Nigerian Revenue Service Bill, that is the bill that empowers the replacement of FIRS, or the new organization that will come into effect after FIRS. All their power, how they are governed, the board, succession, management, and all of that. We also have the JTB that is now going to be Joint Revenue Board. Maybe the one point to mention is that you will notice the replacement of tax with revenue. Nigerian Revenue Service, Joint Revenue Board, rather than joint tax, because from a revenue transformation perspective, the focus is no longer just taxes. It's now all revenue that is accruable to the government. So if you go to the Joint Revenue Board, that's where you will have all the expanded activities, their responsibility with maintaining a consolidated taxpayer database. I'm particularly looking forward to that because it's going to be one of the game changers to making sure that we have greater tax penetration, establishment of tax tribunals, establishment of the tax ombuds office, which is again another introduction in our tax law. Only very few countries on the continent have it, but it's supposed to be the advocate for the middle class and the low who can afford legal services. So quite a lot of those introduction. And then you go on a few slides. I'll just skip now. I wanted to talk to some issues around VAT and all of that, and fiscal federalism. I will skip it. If you go next to the face, and I'm beginning to wrap up my thoughts now. Right? Move on to the next one. I want to talk to the slide that talks to the expected shift. One more slide. One more slide. And the next slide. All right. So maybe a few things to just give you an insight into what to expect. And I said the expected sheet. There are 2 slides, and I will just talk to them one by one. From a VAT perspective, what are the expected sheets? I call them sheet because they are fundamental departure from what we currently do. So listen attentively to them. From VAT perspective, expect fiscalization and e-invoicing. All right, meaning that unlike the current regime where you do your VAT returns and submit it, digitalization is coming in, and government want to plug into the system of vendors such that you will issue VAT invoice and government will see on real-time basis the VAT that you are charging. So fiscalization and e-invoicing, if you're a CFO or compliance officer in a business, it's a big deal. It's an area I'm particularly excited about because I work for boys. Expanded input VAT, big thing to consider. Originally, face increase in the VAT rate. We don't know what will happen now, whether they will postpone when the increase will start or they will completely say no increase. But it was some of the things that we were looking for. And then they expanded into VAT. So those are some interesting things to look out for in VAT. From a CIT perspective, originally reduction in rates would have been something to look forward to. Unification of the income tax and capital gains taxation is an important one. So you no longer say, oh, gain on this is chargeable at 10%, but profit tax is chargeable at 30%. Everything now, whether it's profit or gain, they will now be taxed together as part of income tax. There's a new thing, capitalization rule. That is the rule that says what percentage of your EBITDA that you can deduct as interest expense. All right, that rule has changed, and businesses now, if the economic terrains, impresses some business to go and borrow, then the law should allow them to claim deductibility for the interest expense. The only way that the only instance where the thing capitalization will be, implemented or enforced is when it has to do with related party borrowing, because it can be an indirect way of getting dividends. All right, so that one is capped to, I think, 30% of EBITDA, and then you have the opportunity to deduct in the future. Other than that, there's a change. There's now a unilateral foreign tax credit. When you pay taxes on your income abroad and you bring it in, there is now provision for you to claim tax credit to the extent of the tax paid, with some little rule, making sure that the government is not shortchanged. I've mentioned increase in revenue threshold for SME to 50 million. 15% minimum tax for multinational. There have been increase in the revenue band for what constitutes a multinational. I think the recent proposal is 50 billion annual revenue. All right, if you do that, you must pay a minimum of 15% tax in Nigeria in alignment with the global shift. From a personal income tax, I have mentioned more progressive system with higher effective tax rate for the council members and ESCO. And then opportunity for entrepreneurs to formalize their business, because when you say 50 million naira revenue is exempted from tax, what you are doing advantageously is entrepreneurs that should have been running business with their own name or informal business and paying personal income taxes, are now being directed to formalize so that they can claim the benefit applicable to small businesses. So it should help to ensure that businesses are more formalized. And then the last one on this slide, the introduction of development levy to unify all the multiple taxes you know, excise duty on telecom, and a whole number of other initiatives. I think I should just go on and I will just, the way MC Easy is standing, you will know that it's one step to where I am. So other future reforms, so I will just spend 1 minute here. These tax bills is not the final phase. In fact, some of the quick wins and some of the things that should have come in before the bills that somehow either get delayed in passage or get overtaken by the life of its own that the tax bills have taken, some of them will now come later. For example, there is still an economic stabilization bill. It was a emergency economics intervention bill, right? It was meant to come to address a whole lot of, provide some short-term cushion. That proposal was submitted to the executive. I think it was going through approvals and all of that, and then the bill itself was submitted. because of the delay, some of the provisions in the original economic emergency intervention were brought into the bill. So some of the other items that have not been resolved will now be tabled separately. But it is thought by the committee that the tax bill is more than enough to chew. But still expect that in the future. It will come maybe by way of executive orders, and all of that. Some of the implementation. The next is, there's also proposal for constitutional amendments. There are many of the changes, including fiscal governance, including sharing of taxation power and taxing power. Some of them are enshrined in the Constitution. And unless you make changes to those constitutions, you cannot use Nigerian tax law to amend the Constitution or to be in conflict with the Constitution. I mean, simple, basic legal knowledge says if any law is in conflict with the Constitution, to the extent that inconsistencies is not avoided. So go to the next. So there are some proposals on that. All right. So closing thoughts now. If this bill scale through, okay, if it scale through, subject to the modifications that we are seeing, what is our expectation? We're expecting that we have fewer number of tax laws, definite, we just mentioned 4, fewer number of taxes. The goal is 7 digits. There's still a few harmonization that needs to happen at the levies and other levies at the state level. It's been managed now based on gentleman's understanding, but some of them needs to be cleaned up through some of those other things. So fewer taxes, fewer law, fewer tax agencies, so you don't have too many organs coming, not from an assessment standpoint, but from a collection standpoint. The system should be a lot more data-driven, technology-enabled. We should be shifting towards indirect taxes. The system should be slightly more simplified, which is part of the reason why, for example, release and allowances were consolidated. You don't need to be a taxman to say, which one is, how do I determine all the release and allowances that I'm entitled to? Just what's your income? Then tax it based on the tax rate. All right. So that's the whole idea. So make it simpler. All right. Make it more efficient. Expand the tax net. So that's the focus, and we're hoping that at least we will be a step closer to having a fit for purpose law. It will not be perfect. It will never be perfect. No law is perfect. But at least compared to what we currently have, it will be more fit for purpose. We should have capacity to now leverage technology. It won't be automatic, but some of the impediments in terms of the law, I remember that when FRS wrote some of our clients in the past saying they wanted to do fiscalization and plug their system, many of them, and legitimately, they were worried about data, they were worried about privacy and all of that, and they were worried about the specific provision of the law that empower FRS to go and hire an external consultant to come and do that with them and all of that. All of those provisions now have been taken care of in the law. So we now have the opportunity to be able to leverage technology, and hopefully when we all pay more taxes, when the HNIs pay more taxes, all right, we can strengthen the social contract. We can strengthen, holding government accountable, because what I say loosely is that when government officials, mismanage oil resources and other kind of revenue that accrue to the government from other sources other than tax, we all say government is wasting our money. They are mismanaging our money. When you pay taxes and you are paying like 24% from your current effective tax rate of 15, your language will change. Government is wasting my money. It will become my money. And so we'll have a lot more people on Twitter doing 30 days rants about their revenue and all of that. So that's just the overview, and I will close with this final shot to say it is still a space to watch, right? Because the bill is still going through lawmaking process, and all of that. Some things can just a single development can make a fundamental change in the policy. And I have a slide that says 4 things that can change that you should watch out for in 2025 from a fiscal policy perspective. There will still be a lot of pressure on domestic revenue mobilization. Whether this law is passed or is delayed a little, the FRS is on the chase to raise 25 trillion. All right. There is a pending Supreme Court case on VAT. I think it's Lagos State and Rivers, that have those cases. It could throw all of this conversation we're having into the dustbin. All right, so we're hoping that there will be a political solution. All right, so that we don't allow the Supreme Court, or at least the bill is passed first, so that some of the loopholes, can be covered. Because if the judgment is delivered as of today, based on my own limited knowledge, I'm not a lawyer, based on my limited knowledge, the principle will be established that VAT is a state law. And that would throw all of this centralization, by FRS into the dustbin. And of course, there are other proposals by the committee and by the government, and which we should watch out for. In terms of the next step, we're hoping to be passed soon. The target was before the end of this Q1. It's still possible. The House of Rep has passed. If the Senate doesn't pass it by Friday, it's my estimation, I didn't speak to anybody, my estimation is that they will do that next week. Meaning we then have opportunity to harmonize. So if we escape this Q1, my expectation is it will be early Q2, maybe in April. And then we have another 3 months or thereabout, 90 days, before the implementation. So watch out for potentially implementation in second half of the year, June, July, or thereabout. And then we can move to the rest of the phases and so on and so forth. I think I should pause there. And allow the conversation. Thank you so much for